Hi there. I'm Lisa, and I'd like to welcome you to Lesson 2, Understanding Stocks and Shares. In our last lesson, we talked about the stock market and how it's a place where people can buy and sell tiny pieces of companies. Today, we're diving deeper. Owning a stock isn't just about holding a slice of a metaphorical pie, it's about what comes with that ownership. Let's break it down. When you buy a stock, you own a percentage of that company. Let's say Sophie's Java Junction is divided into 1,000 shares. If you buy 10 shares, congratulations, you own 1% of the company. But what does that actually mean? First, there's profits. When Sophie's business does well and earns a profit, she has a choice. She can reinvest that money to open more stores, buy better equipment, or grow the company further. Or she can share some of that profit with stockholders in the form of dividends. What's a dividend? It's basically a cash reward paid to stockholders from the company's profits. Think of it as Sophie saying, "Thanks for believing in Java Junction. Here's a little something extra," but not all companies pay dividends. Some reinvest everything back into growth, hoping their stock value rises over time. Either way, as an investor, you benefit, whether it's through dividends or an increase in the stock's price. Now, let's talk about voting rights. When you own stock, you might also get a voice in company decisions. At annual meetings, shareholders often vote on big topics, like choosing the board of directors or deciding on major business strategies. But here's the thing, not all stocks are the same. Stocks generally fall into two main categories, common stocks and preferred stocks. Common stocks usually come with voting rights and the potential for higher rewards, but they're also more volatile. Preferred stocks, on the other hand, often focus on consistent dividend payouts and steadier pricing. While common stocks are the go-to choice for most beginner investors, preferred stocks are often chosen by those looking for a more predictable income stream. We'll unpack more about these and other investment types in a later lesson, but for now, just know that not all stocks are created equal. This might surprise you. Stocks aren't physical objects anymore. When you buy a stock, your ownership gets recorded digitally in a massive financial database called the Depository Trust and Clearing Corporation, or DTCC. Think of the DTCC like a super secure digital vault. It keeps track of who owns what, making sure every stock trade is accurate and every investor's records are safe. When you open your brokerage account and check your stocks, what you're actually seeing is a digital snapshot of what's in that database. All right, let's zoom out for a second. Stocks are just one tool investors use to grow their money, but they're not the only tool. Let's do a quick comparison. Stocks mean you own a part of a company, and you win if the company grows. Bonds mean you're lending money to a company or government, and they pay you back with interest. Mutual funds are like an investment basket. Your money gets pooled with other investors and managed by a professional who spreads it across stocks, bonds, or other assets to balance risk and reward. Other assets might include things like real estate, commodities like gold, or even foreign currencies. These investments help balance risk and take advantage of opportunities outside traditional markets. Now, are these the only tools out there? No, but they're the big three most beginner investors start with. Here's why this matters. Investing isn't just about buying something and hoping it goes up. It's about understanding what you own, why you own it, and what that ownership means. So far, we've talked about what stocks represent, how ownership works, and how stocks compare to other investment tools. But behind every stock trade, dividend payout, and annual meeting, there are people making sure everything works smoothly. In our next lesson, we'll meet Susan the stockbroker, Mike the market maker, and Elliot the junior analyst. They're the ones pulling the levers, reading the charts, and keeping this whole engine running. So grab your coffee, and I'll see you in Lesson 3. Key players in the market. Meet Mike, Susan, and the Wall Street crew.